You can invest your individual retirement account or IRA and qualified plan assets, 401ks, Roth 401ks, defined benefit plans, in so many different ways that people don't know about. As a matter of fact, yes, you can invest those assets into real estate. And sometimes, by the way, make a great rate of return, maybe even as high as 20%. Few people know this information. Kenneth French with VastSolutionsGroup.com. We do tax, finance, and artificial intelligence for entrepreneurs. We help entrepreneurs using advanced technologies get prepared for retirement and have a nice life when in retirement. We have saved hundreds of thousands of dollars, if not millions of dollars, for people over the 50 years we've been around. So let's get straight to it. By the way, there's going to be a little surprise, a little bonus for you at the very end. So please do listen up. At first thought, putting real estate into an IRA or a qualified plan may seem like a kind of an off-the-wall idea. It's one that you might really want to consider depending on your circumstance. But you must be aware of all the rules. There's a lot of rules that can impact your decision. The rules can be mind-boggling, but still, it can be a wise decision. Now, how are these kind of becoming a little bit more popular than they used to be? Really, because of 2007, 2009, the bear market, the great, I guess you could call it the recession, led some IRA owners and qualified plan owners to explore alternative investments. This is when the term self-directed IRA or self-trusteed 401k plans entered into the investing lexicon. As the market tumbled, meaning the stock market, a cottage industry of investment firms kind of emerged, urging, IRA owners and 401k trustees to seek out some investments in real estate notes, real estate investment trusts, or what's called REITs, etc. In many instances, a financial professional may resist, by the way, your inclination to invest in qualified plan assets, being IRA assets into real estate. Now, why is that? Yeah, I don't think they know quite as much about real estate in some cases as they do about stocks, bonds, mutual funds, etc. Plus, by the way, they usually don't have compliance arms that understands real estate. So it's a number of things that really goes with the specter of real estate in qualified plans. And frankly, sometimes they just can't get paid. It's not a viable option for them to get paid. So I hate to look at it that way, but sometimes they might steer you away as a result. But with respect to IRAs, no law prohibits an IRA owner from doing this. Many financial firms serving as IRA custodians do have rules against such a strategy of putting real estate in qualified plans. But, if you want to invest in real estate through your IRA, you must first check, by the way, with your IRA custodian, because that will make a determination if that vendor, that IRA custodian, will allow you, or sounds weird, to allow you to do so, meaning invest in real estate. And now, if it is allowed, you need to proceed with caution. Make sure you're doing it in a fashion you really understand, because they, meaning the IRA custodian, will not help you. It's up to you. That's why they call them self-directed IRAs. It's completely up to you because, again, usually vendors can't get paid on those, frankly. So now let's talk about specifically with qualified plans, including 401ks and Roth 401ks, profit sharing plans, and defined benefit plan, where the business owner is typically the trustee. They're the ones who are in charge of the plan. The result is the entrepreneurs make the determination of where the assets are invested. Again, stocks, bonds, mutual funds, etc. As a result, they can also make the choice to invest in real estate. It can be income-producing real estate. It could be land. It could be buildings. It can be apartment buildings. Whatever the case is, there are specific rules. But yes, you can invest in those types of real estate assets. If the company has employees who are then participants who are not related to the company's business owner in any way, a significant amount of care needs to be taken into account then, because you're what's called the fiduciary, if that is you. The liability falls on the shoulder of the business owner who is really jealously guarding the assets for the employees, i.e. the participants. Very, very important. Now let's get into the specifics of holding real estate and qualified plans. You have to look at it a little differently. To a lesser, or I guess to a great degree, the portion of the amount in real estate transforms from a dedicated retirement savings vehicle to a real estate investment vehicle. That's really what it is, if you really think about it. If you're more knowledgeable about the housing market, in the stock market, it may work for you then. It may very, very well work out for you. Well, whether you know volumes about real estate or not, you must abide by all the specific regulations. Let's get into some of the regulations so you understand those. We get a lot of calls to our office. We get a lot of calls to our office about real estate and IRAs and qualified plans. So self-dealing is outlawed. What is self-dealing? Legally, you can buy any form of real estate with your IRA and qualified plan assets, but you may not buy real property that will be used as your home or your place of business. When I say home, also think vacation home, by the way. I know what you're thinking. Your IRA and qualified plans, which, by the way, are both defined as trusts, may not purchase any real estate that you own or any real estate that is owned by a business in which you or certain members of your family have an ownership interest. It's barred from selling any real property. It holds as even in any entities as well, meaning, LLCs, etc. So if we're talking about an IRA, specifically just an IRA, okay, you buy and sell real estate through the IRA custodian. The mechanics of making the actual transaction, it's fairly straightforward. You instruct your IRA custodian to authorize the purchase or sale of the property and providing the required documentation to facilitate the purchase. Now, the IRA custodian then commences to buy or sell the property to the IRA with the title of the property vested in the name of the custodian. You have to have enough money. This is important. You have to have enough money in the IRA to cover 100% of the property management and the property specific expenses linked to that transaction. Failing that, you're going to get eaten up with tax penalties, and it's just not good. I'll just say it's just not good. Now let's talk about the qualified plans or the 401ks, profit sharing plans, defined benefit plans. Now, if you are the trustee, you have to open an account at an accredited banking institution to comply with the many of the same functions as the IRA custodian, frankly. You will need some consultation, but the concept is basically the same as I just mentioned earlier. Now, proceeds from the sale and rental income, they must go back into the IRA or the qualified plan itself. This is necessary so that the account may retain its, quote, tax-deferred status. These newly invested assets get the same amount of creditor protection that the IRA does, as a matter of fact. The level of protection varies per state, by the way, so you need to know your state regs in that case. But in some cases, it really does make a lot of sense, And some people say, well, do I need to form an LLC? Well, it depends on the circumstance. Some owners of self-directed IRAs and qualified plans do that, meaning underneath the plan, underneath the IRA, underneath the qualified plan, they set up an entity or an LLC so that they have what's called checkbook control over the assets. Now, how does this work? The LLC sets up a bank account for the IRA owner or the 401k trustee, allowing he or she to write checks on behalf of the IRA or the plan. Now, the LLC facilitates the transactions for the IRA owner and also the plan trustee. Now, with respect to IRAs, there are some notable benefits to adopting the LLC structure, I should probably mention. Timing can be everything when it comes to real estate transaction, and having a checkbook IRA gives you a lot of chance to be able to buy, let's say, foreclosure on the steps of the local courthouse or with the IRA assets. An LLC structure may lower some custodial costs associated with IRA administration, depending on the vendor, by the way. And it also permits the IRA owner the option of handling some of the property management duties, such as bill paying, advertising, collection, and disposition of deposits of rents. On the other hand, by the way, since the IRA is a trust from its inception, the LLC structure is technically superfluous. But again, for the reasons outlawed, then based on the circumstances, it sometimes makes sense. Really, every circumstance is different. I know I should probably note. You can just call our office if you want to get any specifics, because I could go all day about some of the specifics there. Now, it should be noted, sometimes real estate assets in qualified plans, it does not make good investment sense. Specifically, taking a tax-advantaged asset like real estate and invest it into a tax-deferred environment goes against logic. But, if someone doesn't have any access to any money, any other non-qualified monies, makes sense then to use your 401k or use your IRA assets for investing in real estate. If you want to hold real estate in an IRA or qualified plan, just speak to a tax professional, legal professional who understands these, because there are so many specifics that there can be issues. If you have one property that goes wrong in your IRA, it could dispel or void the whole IRA and all your taxes, i.e. tax savings. You also get penalized. So it could be a very, very bad thing. You need to talk to a consultant that understands that. Call our office, 888-808-8278, or check us on the web for any specifics. We have a lot of content on our website at www.vastsolutionsgroup.com. So we should be able to help you either calling us or checking us out on the web, and all our information on the web. I said there was going to be a little bonus if you stayed for a while, and thank you for staying and listening, because hopefully this is of value. It's something that more people need to know about, because real estate is in some cases a pretty good investment, depending on the circumstance, I'm going to say. But email us at einstein@vastsolutionsgroup.com, which is EINSTEIN @vastsolutionsgroup.com. We're going to send you a copy of my book, Entrepreneur's Manifesto, a collection of smart financial advice, also $50 gift certificate to Starbucks. As long as there's no more than 10 people who do so, you're going to be the first 10. If you're one of the first 10, get a Starbucks gift card for $50, and then the book by, again, emailing us, einstein@vastsolutionsgroup.com. By the way, if you need any information on disclosures, et cetera, you can get it by give us a call at, again, 888-808-8278. It's been a pleasure. Kenner French, I've had the pleasure of working with a lot of clients over the years. It's been great time being able to help an entrepreneur who does not know or did not know that you can put real estate assets in an IRA, therefore potentially making as high of a rate of return of 20% per year, if not more. Once again, thanks for taking the time to listen to this.